For the Smart Money Bootcamp, my name is OZ from OzFx, and today we got a good one to go over, and we're going to be going over imbalances. Depending on what you have already studied, you may have heard it being called something else, maybe a fair value gap, maybe IPA. It's all the same, it's just imbalance. In simple terms, imbalance is when there are more buyers than sellers or more sellers than buyers, or just only buyers or only sellers. This is normally seen in the charts by a big movement in one direction with only buy side or sell side delivery. The price algorithm sees IPA as an inefficiency and typically looks to fill these gaps in right away, but not always. Sometimes they will be left alone. Some people call those breakaway gaps. It doesn't really matter. Don't overcomplicate it. But as you can see, I have drawn here, we have some candles here, and as you can tell, I actually drew wicks on this slide. We got wicks here, and this is how you would technically highlight imbalance, or one way that you could draw imbalances on your chart. So as you can see, it takes 3 candles to make up an imbalance, at least 3 candles. And this can change depending on what time frame you're on, because different time frames have different candles and different wicks and stuff like that. But for the most part, the inefficiency stays true. Okay, so we got this candle coming down, creates a wick, it comes down, comes all the way down here, comes back up and closes. That's buying right there. And then this candle opens, goes all the way down, closes. This candle opens, comes up, and then drops. So there was only selling in this area right here. This is what we would call an imbalance, and this candle is most likely going to be pushing up to it, filling this imbalance, and hopefully falling from there. How can we use IPA? When looking for setups, use imbalances in price as another confluence. So if you have an order block, stack an imbalance on top of it, you have another confirmation. Depending on how advanced you are, you can enter a trade in an imbalance zone alone. I don't recommend it for beginners, but once you really understand imbalances and know how to use them and know how they work in the market, and after a lot of practice, this is actually a very successful way to trade. Remembering that price often fills in these gaps can aid you in selecting trades and managing them once you're inside of them. And I'll show an example of that in the charts. But for an example, you have an order block with IPA above or below, all laying in the fib zone, and this is a high probability setup. You got 3 confirmations right there. That is the absolute least I think that you should have. But something I have noticed about a large number of traders is that they either underestimate or overlook imbalances. The price algorithm is greatly drawn to imbalances, just like liquidity, so we can use imbalance to judge where price might be drawn to or react from. If you don't see anything that looks like an entry to you on the chart, just look for imbalance and go from there. I'm not saying trade off of it, but look for it. A lot of traders overlook imbalances. Not all, but a lot of traders overlook imbalances. When I was first learning how to trade, they told me, don't let imbalance talk you into or out of a trade. And that statement right there kind of made me just overlook it and not realize how important it really is. When you really start watching price and seeing the algorithm constantly fill in imbalances, liquidity and imbalances are the number one thing that I see price reaching for. But let's not overcomplicate something so simple, because this is really, really simple. Let's look at the charts. All right. So here we are over on TradingView, and I have S&P 500 pulled up on the 1 hour right now, and we're just going to start looking for imbalances and see how it reacted off of it. Okay, so the first one I see is literally right where price is already at, and this is the weekend when I'm recording this, so price isn't actually live. But if you look here on the 1 hour, and remember I said the imbalances can change depending on what time frame you're on. So there's probably an imbalance here on the 4 hour. Actually, let's go look at that really quick. Yep, there's an imbalance here on the 4 hour as well. Let's actually start on the 4 hour and work our way down. So if you can see here, now you can draw this either one of 2 ways. You can either draw a box like this, and that's a box right there, and I save a template over here, and all my imbalances are typically blue. If I don't draw it like this, I draw it like this, and I just draw 2 trend lines, and then this would have been the next candle right there, and then that would be your imbalance. I would typically change the color because my gray lines are my liquidity lines. So right there, that is imbalance, and look, price is inside of it right now. Now if we go down to the 1 hour, I want to show you how it can look different. Okay, so see, this is not what the imbalance is on the 1 hour. The imbalance is actually from this candle. There's multiple imbalances here, but there's an imbalance here. I'm going to draw boxes for the rest of my imbalances just for the sake of time. Here is another imbalance right here. And this is already being filled in currently, okay? Now, let me show you something else, okay? We're on the 1 hour, and I want you to pretend that this candle wasn't here yet. So if you look at this, you got from here to here, that was an imbalance. And look, price reached right into it and took off. Just one example how price fills in imbalances and keeps on going to the desired direction. Now, if you look at this here, you might be wondering, why was this one left open? I have no idea, but it was. The market does what it wants, honestly. But remember, it's probabilities. Over time and over back testing, you can see the probability of whatever it is that you're testing. So let's keep on investigating, okay? All right, so right here, we have another example. So right here, imbalance from here to here. And it actually fills it in and it goes above it. And that's all right, because you're not going to enter a trade based off of imbalance like this. Like, this is your trade planner. You're not going to put your stop loss at the top of the imbalance. That's just doesn't work. That's not the way that we do it. If you wanted to enter this trade right here, if you wanted to take a sell, what you would do is you would still put your stop loss above this high rate. Makes it a very big stop loss, I know. If you waited for an order block in this case, you would have never gotten in, okay? So you could take this down. You got a 2-to-1 right there, but there's another thing that you can do when it comes to entering on imbalances. You can take your fib tool, or however you can measure 50% of a range. So I pull my fib tool on this and I change it to 50%. You can go in and you can edit your fib like this. You just put in the 0.5, take everything else off, and you got 50%. So you could enter at the 50% of the imbalance, and that at least pulls it up a little bit better. Gives you a better entry. So I see another imbalance that you could use right here. And look, price actually came into it twice. Is literally as soon as it broke out, it came back into it and shot up. Came all the way back down, respected it nicely, respected it almost perfectly, and went back up to the upside. Just like I see this imbalance right here, came into it, filled it, played around in here a little bit, maybe even mitigating this order block right here, and then came up to the upside. I see another example right here. So there's a wick at the bottom of this candle here. So there's a wick at the bottom of this candle here. It goes all the way down to there, and price comes up and mitigates it perfectly. Fills in the imbalance and keeps on moving. Look at this. On a lower time frame, I'm sure there was a candle closure in here somewhere. So this is something that you could go and investigate. All right, so we are going to investigate this right here. All right, so here we are on the 15-minute. We're actually going to delete that now, and we are going to refine this. So the bottom of this candle to the top of that candle, and you have your imbalance. Price literally comes right back up and almost fills all of it. One rule to remember that I have not mentioned yet, that in order for an imbalance to be considered filled, only needs to fill half of it. And this filled more than half, all right? So let's keep on looking here, and even from all the way out here, I can see this one. So we got right here, you got the bottom of this candle, the top of that candle completely gets filled in. It's too easy. What I'm showing you at this point should be redundant. So here we have another example. And you got the bottom of this candle right here down to this candle. And look how it completely just takes forever to fill this in. But it was choppy the whole time in there. And that's just playing around in a point of interest, okay? It finally breaks out of it, comes back up, and falls off the face of the earth. I see a very good example right here. So, at the time of this candle being made, from here to here was an imbalance as well, that it quickly came back down and returned into the imbalance and filled it before it went off to the upside. Stop loss would have been below it. Say you entered at the top, put your stop loss down here, and this trade would have been a monster, I can already tell you that. This would have been a 10-to-1. I don't feel the need to go through the entire market just to show you imbalances. This is a very simple concept. It takes 3 candles to form an imbalance. Now, knowing which imbalances are the right imbalances, there's never technically the right imbalance, okay? But knowing when and how to use imbalances is what's key. And you will see as we continue to go through this boot camp, everything will completely come together for you, and you will be able to go into the market, know how to look for these things, know how to use these things. And if you stay active in the group and come to the live trade rooms, you're going to be able to practice using this in the market with me, with the group, if you're in the group, and it'll be great. Honestly, the best way to learn and to have confidence in imbalances is just to see them work over and over again. The best way to learn about imbalances is just like everything else. Practice it. Draw it out. Just stay consistent. Try to look at the market at least every day for a little bit of time. And now that we have gone over imbalances, we have gone over a pretty good amount of the basic material. Some of you should be able to even create a trading plan at this point. If you haven't, go back to the very first episode of the Smart Money Bootcamp and download the trading plan and make sure you're filling it out. Imbalances should definitely be on there, but not an absolute must. Alright guys, so that is all I got for the video on imbalances. I will catch you on the next one.